Well, hello and welcome to Business Incorporated. It's the trading day right after the first rate cut in 5 years. Here are the stories you'll be watching out for. We get more clarity on the CBN MPC latest move. What's the outlook for inflation, the Naira, and interest rates? The Bank of Ghana has introduced a new rule requiring digital lenders to hold a minimum capital of 2 million Ghana cedis. A new World Bank report reveals that only 6% of informal businesses pay taxes, highlighting major gaps in revenue collection. It's great to have you join us. I'm Ladi Williams. Let's get a check on what's playing out with the commodities that we track now. We're seeing oil prices looking good, 1.06%. That's for Brent, $68.35 a barrel. Could we make a run to 70 this week? WTI crude, $64.10. Still within that range trade there, 1.10% up. So we're seeing, crude inventories there giving some assurance to the investors there in the markets with what we're seeing play out for oil demand and what's held within U.S. Oil inventories there. So we're seeing positive sentiment rather than the oil market. Let's get a check on the metals market now. See gold prices held firm. In Asian trade today, hovering near record highs after U.S. Federal Reserve Chair Jerome Powell, he warned of persistent risks to growth, inflation, and interest rates. He gave a cautious outlook there. And so we see the impact on the markets there, the metals market. But we see spot gold, that's unchanged, $3,762 per ounce. U.S. gold futures, 0.50% down. The biggest drop we have with the metals that we track, we see platinum, a big 2.10% drop there, $1,475 per ounce. Palladium's not left out there with the red on the screen, 0.90% down. So that's the color right there for the metals market. They'll pull back right there, even though they're at record highs at this point. All right, in a bold move to tighten oversight of fintech lending, the Bank of Ghana, they've mandated that all digital credit providers now carry a minimum capital of 2 million Ghana cedis. The regulation aimed at fostering stability and protecting borrowers in the burgeoning online loan space sets a higher barrier to entry for new players and reinforces the central bank's push to regulate the sector more rigorously. All right, let's go to East Africa now. See, Kenyan MPs are weighing a bold move to shield borrowers from runaway interest. A proposed cap that would ensure no one pays more in interest than the original loan. The initiative also highlights regulatory gaps in Kenya's lending sector, where many microfinance and digital lenders operate with minimal oversight and impose terms that exceed borrowers' repayment capacity. So we're seeing a lot of focus right there on the digital lending space. Now, we see the World Bank, they found that only 6% of Zimbabwe's informal sector pays taxes, with just 1 in 5 earning taxable income, highlighting a challenge as the government moves to scale up collections from the largely untaxed sector. Following findings that out of the 204 798 operational establishments in Zimbabwe, a massive 76.1% are informal. The government has been ramping up efforts to tax this sector for a while there, so we're seeing big moves coming there. All right, to North Africa. Egypt's East Port Said has surged into the top 3 most efficient container ports worldwide, climbing from 10th place in 2022, according to the World Bank's latest Container Port Performance Index. That was released yesterday. The CPPI measures efficiency at 405 container ports globally based on vessel turnaround times and operational performance. EPS is now also the highest ranked port in the Middle East and North Africa, ahead of rivals such as Jebel Ali in Dubai. Overall, port performance declined globally between 2020 and 2024 owing to the Red Sea crisis, challenges at Panama Canal, and pandemic-related shocks. The World Bank said that while noting that efficiency rose at the largest ports in high-income countries and above all in East Asia there. So it's good to keep a track there on what's playing out with the major ports in the world at this point. To South Africa now, the African Growth and Opportunity Act, better known as AGOA, is set to expire at the end of September, just a week from now. South Africa's Deputy Minister of Trade, Industry and Competition, Zuko Godlimpi, says that while the impact will be significant, it won't be a knockout blow for a more diversified economy like South Africa's. He's noted that the overall GDP loss may be modest, but cautioned that certain sectors and regions will feel the pain more sharply. He was speaking at the China-South Africa Trade Fair, currently underway in Johannesburg. Our South Africa correspondent, Innocent Somoza, has more.
South Africa and China are taking another step towards strengthening their economic cooperation. The Chinese embassy, together with the Department of Trade, Industry and Competition, is hosting the South Africa-China Trade and Investment Promotion Conference and the official opening of the 9th China-South Africa Trade Fair. But the question remains, what new areas of investment are Chinese companies exploring in South Africa?
From the engineering equipment area. So the equipment for the mining, for the road machine, road maintenance, and for the port and the logistics, because we have engineering equipment products and also renewable energy products here.
Meanwhile, the Black Business Council of South Africa is urging Chinese companies to increase their investment in the country, while stressing that the relationship must be a two-way street.
We can't only just be exporters or importers of China's products. They must come and establish factories here so that we can create jobs in South Africa. We can also re-industrialize our country. So it's very, very important that it's not going to be a one-sided type of a relationship. It's a relationship that also involves both China and ourselves.
With the African Growth and Opportunity Act AGOA set to expire, South Africa's Deputy Minister of Trade and Industry, Zuko Godlimpi, says the moment underscores the need for South Africa to further diversify its economy.
Obviously, facing as we do the headwinds in the global trade environment, strengthening our trade is absolutely critical. In particular, as we've said, being able to diversify what we send to the Chinese market compared to what has been the case until now. And so it was reported here today that there's already agreement on 100 products that will enter the South African and the Chinese market. What is being worked on now are the protocols to allow that to happen. That bodes well for the South African economy.
All eyes are now on whether these discussions will lead to concrete deals and signal a new chapter in South Africa-China economic relations. From Johannesburg, South Africa, Innocent Somoza, Channels Television News.
Thank you, Innocent. Well, definitely it's no news now. Nigeria's central bank cut its benchmark interest rate by 50 basis points, marking the first easing in years as policymakers seek to balance slowing inflation with the need to stimulate growth. Let's break down the latest cut now with Dr. Victor Obo, is the Director, Monetary Policy Department at Central Bank of Nigeria, joining me from Abuja studio. Great to have you on the show, sir.
Good afternoon, Ladi.
Fantastic. So I guess it's excitement now, from the MPC side of things and, private sector right here in Nigeria. But talk to me about the expected impact of this 50 basis point cut on the Naira, and how do we really see cheaper credit going forward with this?
Thank you very much, and good afternoon, Nigerians. It's no longer news that the Monetary Policy Committee at its 302nd meeting held 2 days ago with an announcement yesterday cut the MPR by 50 basis points, thereby reducing the MPR from 27.5 to 27%. This decision was taken on the back of prevailing macroeconomic environment, which has improved considerably. As you agree with me, most of the macro indicators have turned green. And not just green, but they are sustained in terms of this green nature of the indicators. Talking about the inflation numbers, the exchange rate, the reserves, even the balance of payment, and the rest of them. So this gives the committee some impetus to once again think that it is high time they considered the issue of economic recovery and to support government effort in improving economic recovery. So that is it. We expect that since there is a cut in the MPR, that should transmit to all other rates, including the retail rates, the prime lending rate, and even the maximum lending rate, so that growth can also be supported to some extent, while at the same time not jeopardizing the issue of protecting low and stable inflation. Thank you.
Also know the relationship between interest rates and the country's currency. So normally, a rate cut normally leads to a weakening of the local currency, and a rate hike normally raises the strength of the currency. So now that we have the first rate cut, is there a risk of the naira getting weaker, in your opinion?
Oh, not at all, Ladi. Remember that the fundamentals, the macro fundamentals are strong. We are hopeful with the reforms in the exchange rate market that the naira will continue to strengthen. Remember that the naira currently is trading below 1,500 per dollar. And the key issues around that, has to do with the availability of forex exchange, the liquidity at the FX window, which is very, very strong and very high to sustain the demand at that market. As I speak to you, all demands that are legitimate are backed up and they are met at that rate. Now, the premium between the BDC and the official end firm is almost zero. It's very low too, which tells you that this rate, this stability in the exchange rate market, window is sustainable. Much to that is the robust external reserve position that we have that is able to be able to defend in case of any shock. So all this provide the comfort that the slight increase in MPR is not likely to see or lead to any depreciation in the value of the local currency, the naira.
All right, let's look at another big headliner from yesterday. That's for the non-TSA bank deposits. Therefore, the CR of about 75%. For those. I'm wondering how the CBN is going to gauge, compliance for this and the expectations, going forward.
It's very clear. What the CBN has just done is to ensure that non-TSA public sector deposits are brought under the CRR regime of 75%. It simply means that all deposits from public sector that are not under the TSA will now be charged 75%, CRR. They will be sterilized. What that simply means is that CBN is restricting the use of those funds for trading by banks, because those set of funds, are part of liquidity, extra liquidity injection into the banking system, therefore complicating the management of liquidity by the central bank. So necessary steps will be put in place to ensure that the banks comply with this. And this does not impede the owners of those funds to have access to them as and when due.
All right, so definitely we have the first cut now. There's also that risk of stoking inflation again going forward. What are the strategies here to keep inflation in check post this rate cut?
The strategy is this. If you look at what we've just discussed about the CRR on non-TSA public deposits, is going to help in a very significant way in sterilizing liquidity at that level. So that is going to bring down the level of liquidity that will be inflationary. That is on the one side. The other side is that the tweaking we have done to the corridor will be helpful in encouraging interbank trading. And if that interbank transaction is strengthened, it's going to help to improve monetary policy transmission. That is on the other side. There are also some very good factors that give us an impetus for positive outlook in terms of inflation. Remember that we are approaching the onset of the harvest season, which simply means that the prices of food items, which constitute a major proportion of the CPI basket, those prices will continue to downtrend. And that is going to help us to sustain the pace of disinflation that we have. But much more importantly is the impact of the stable exchange rate. So in that aspect, that is going to stem the rate or the transmission of imported inflation into the local economy. So with all this, we are very, very optimistic that the inflation will continue to decelerate.
All right, definitely I share that optimism too, and hopefully maybe at the next rate setting meeting, maybe we get a 100 basis point cut next. Hopefully we'll keep watching out for that and keeping our eyes on inflation and the currency. Thank you so much, Dr. Victor Obo is the Director, Monetary Policy Committee Department at the Central Bank of Nigeria. Thank you for coming on today. All right, let's get a check on what's playing out with the markets now on the African continent. We see the NGX there. It's mostly positive sentiment. And this is the trading day after that rate cut, 0.15% up. That's the intraday trade right there. Johannesburg Stock Exchange, that's a bigger move up, 0.69%. And now, looking at the 106,000 level, I believe the markets are closed in South Africa today for a holiday. But let's get a check on other markets now. We see the trading day Africa there, EGX 30, big move up, 1.40%, 35,822 points. And we see the Nairobi Stock Exchange closing in the green, 0.53% to the good. Let's look at the Gulf region now. The United Arab Emirates there, we see it's a big, big red pullbacks right there in the markets that we track there. 1.52% drop for the Dubai index in the UAE. Let's get a check now on the Saudi and Qatari moves there. And it's a big move there, 5.08% gain. That's for the Tadawul in Saudi Arabia, 11,428 points there. So it's looking really good there for the Saudi Arabia index. All right, let's get a check on the U.S. markets now. For the futures market, we see the Dow Jones Industrial Average. That's flat there, 0.03% up. But the Nasdaq, that's more convincing start we've seen there, 24,907 points. We'll see if this gives direction right there for what to expect when the real trade kicks off in the U.S. But let's get a summary of yesterday's close from our correspondent, Maria Bird.
The U.S. stock market fell on Tuesday, breaking a record-setting streak. As the Dow Jones was down at 0.2%, the S&P 500 down at 0.6%, and the heavy tech Nasdaq down at almost 1%. As many investors were watching to see what the Federal Reserve Chairman would be stating about interest rate cuts, as it appears as if he alluded to the fact that we could see a slowing down in interest rate cuts over the next few months and weeks ahead, as the central bank may be pulling back a bit. As many investors continue to watch, they are hopeful that we could see stabilization in the U.S. economy in the next few days and weeks ahead.
That's good. We already heard from the Fed chair there that they might go slower when it comes to rate cuts, going forward in the U.S. But getting a check on Asia now. Asian Pacific markets traded mixed today. I mean, Wall Street's declines after U.S. Federal Reserve Chair Jerome Powell. He did say equity prices are fairly highly valued at this point. And we'll see the impact right there on the cost piece, 0.40% to close. But the Hang Seng Index, that's 1.37% up. Let's get a check now on the Nifty 50 and other markets we track. You see the Nifty, that's struggling to hold on to this 25,000 level, down 0.45% to close. And we see the Shanghai Composite, a bigger 0.83% advance to 3,853 points. Let's get a check now on Europe. One of Europe's biggest defense projects, a new fighter jet co-developed by Airbus and Dassault. There's problems in the development process and many open questions. Well, let's get a check first on the markets in Europe with Lars Holter. Great to have you, Lars. How's it looking for this trading week?
Yeah, hi, Lottie. Good to be with you. We're having a pretty mixed day today, I got to tell you. The DAX mostly down for the early part of the trading day. Now it's doing a little bit better. Now here's a little bit of background here. Pressure came initially from Fed Chief Jerome Powell over in the U.S., hinting at the Fed's dilemma over the current U.S. economy and hinting at probably no further rate cuts. So there was a little bit of bad news putting pressure here on stocks, and then staying in the U.S. because there's really not much news out of Germany right now for investors to digest. Staying in the U.S., President Donald Trump, apparently, we heard that yesterday, wants to actively support Ukraine in an effort to now defeat Russia. Came as a bit of a surprise to folks at the General Assembly and to investors who went right on and picked up some defense stocks. So they're up now, and that's part of why the market is now doing a bit better, and it's actually in green territory right now.
Right, and there's some news out in the defense sector where Europe's most ambitious projects has seen stumbling, at this point. What are you hearing about that?
Yeah, Ladi, indeed. We're talking about the new FCAS fighter jets. The acronym here stands for Future Combat Aircraft System. And so we're not just talking about fighter jets. We're talking about a system that includes drones and cutting-edge military software as well. It's supposed to be developed jointly by Airbus Defense and the Dassault Group. That is a French conglomerate with major interests in aerospace and technology. But these two partners now cannot agree on who is doing what. It was originally said that Germany, along with Spain, by the way, would get around half the work on the project, with France getting the other half. And now, all of a sudden, Dassault seems to insist they get 80% of the job with regards to the fighter jet portion, which is the largest part of the system. The irony in all this, Lottie, is obvious. This joint project was supposed to also showcase the strength of pan-European cooperation, and that is apparently not working at all, making it a bit more difficult. Even France, of course, as we know, is politically weakened right now. The country's last defense secretary was just made prime minister, but he doesn't have a majority to govern. It's all quite frustrating, and it's slowing down an already tedious project. After all, even with things working out, Airbus and Dassault said they wouldn't have the combat system ready before 2040, and that is a long time.
Yeah, quite a long time. So what are European militaries doing in the meantime?
Yeah, Ladi, that is the most ironic thing here. At a time when this FCAS system was supposed to be built for the continent to become less dependent on the United States, they are now growing even more dependent on Washington. The thing is, there are other European fighter jets on the market, but they're relatively old. They do not have all the latest technological capabilities. The F-35, however, does, and that is, of course, the American fighter jet made by Lockheed Martin, and a growing number number of European countries are now ordering these. Germany among them. They just ordered 3 dozen F-35s as well, as they're obviously well aware of how desperately they need to prop up their fleet. Now, there is still some hope that Airbus and Dassault find a better way to cooperate. However, in the meantime, Airbus is also looking at another couple of European companies as potential partners, and that includes Britain's BAE Systems and Italy's Leonardo Group. Sweden's Saab is also said to be interested. So there are options, but Ladi, the clock is ticking, and it would be helpful if Europe could show some decisiveness and get started on this new defense system.
All right, clock is ticking. We'll keep tracking to see if they make it in time. Thank you so much, Lance Halter, for the details there out of Europe.
Yeah, thank you, Ladi.
All right, quick check now. What's playing out in the crypto market? Yep, it's red on screen there. Some of the headlines. The crypto market has hit below $4 trillion. The market cap has hit that below that for about 3.9 trillion at this point. But definitely, investors will keep an eye on that. Is that a sign of things to come? We'll definitely watch out there. Then the SEC in the U.S., they've cleared the path for Grayscale's Ethereum ETFs. We know most of these ETFs keep popping up at this time. They've moved under the U.S. Securities and Exchange Commission's new generic framework following a rule change at the New York Stock Exchange ARCA. The shift places the Grayscale Ethereum Trust ETF and the Grayscale Ethereum Mini Trust ETF within Rule 8.201E of the rulebook there. Then Tether is seeking a $500 billion valuation. They're trying to raise money at this point. We know this is one of the biggest stablecoin companies there. So they're trying to raise some funds there, and definitely investors are looking like they're ready to stash some cash in there. So those are the top headlines right there in the crypto space. And that's how most of the markets that we're tracking are looking. Top stories right there. Thank you for watching. We'll give you more updates tomorrow on what's playing out. Thank you for watching. I'm Ladi Williams. Bye for now.